What's happening, everybody? So I just wanted to go over something very quickly that I think that you'll find useful and just to really help you to stop stressing about your entries. Now, there's one thing that I teach in my course, and I just want to share it with you because I think it's going to be very helpful. Now, when we're setting our stop loss and our risk to reward ratio in terms of our target, what we're looking at here is a very powerful tool. Now, what this tool is going to do, of course, is going to help manage your risk and potentially hit some targets. Now, one thing we all must remember as traders is that we never know when we're going to hit target. That's why this becomes a numbers game, and that's why we must continue to repeat what we do over and over again. So that being said, the analogy that I use with my students is that we view this as a sword and shield. Now, I know some of you might laugh at this and say, well, what's a sword and shield got to do with this? Well, let me ask you a question. When you go to battle, or when there is a battle, should I say, you go to the battlefield, and of course, there's things that you're wearing: armor, shield, your weapon, your sword, whatever it may be. If the opposing enemies decided to come into the battle with just their swords, and you decided to come into the battle with your sword and your shield, who is likely to win? And vice versa. So if you see this analogy as I'm explaining it, what you'll realize is that without protection, there's no point going for a target. And without your protection, there really is no target. So what we've got to do is we've got to decide how to use this carefully. And long and short of this, some mornings we may wake up, we may feel pretty down. I don't know what. Last night we had a bad night's sleep. We had an argument with a spouse, or we just had a really shitty day at work. And then you decide to say to yourself, well, you know what? I still want to trade because I want to make money. And you know what? There's a great opportunity that I saw yesterday and I want to take it today. What usually could happen is you come to the market, you have it in your head that you set a 10 pip stop loss and you go for, let's just say, a 20 pip target. Now, I'm not trying to line this up perfectly because it will take too long, but let's get the gist of this. This is a 10 pip stop loss. This is a 30 pip target. You're going for a 1 to 3. Now, as you take this trade, you see that there's a nice pin bar. Price is starting to push down and you decide to enter the trade. Now, you've missed the sell stop. What you've decided to do is just say to yourself, I'm going to stick with my 10 pip stop loss. And because it's a little bit of a late entry, I'm going to decide to enter the market here. Now notice, if we line this up with the wick in itself, this is not a bus structure. But the reason you're doing this is because you've woken up a bit sad. You're not feeling like you really want to trade, but you feel like you have to trade because you're not going to hit your targets. So you go for it. You risk the same percent that you would normally do, even if you have the structure, stop loss above structure. And what happens? Price comes back, stops you out, pushes down, comes back for a retest, and then hits your target. At the end of it, you're going to say to yourself, well, I'm feeling super shitty now. And what do you go and do? You go and jump into another trade, probably lose that. This sad face has gone from being sad to super sad. Okay? And then what happens? There's a ripple effect. You start to revenge trade. You start to increase your lot sizes. You start to take multiple trades and scalp. And then you go down to the 1 minute time frame thinking that you can recover everything. And then before you know it, you've absolutely screwed it up. On the other hand, you may wake up in the morning and you're feeling a little bit happier. And you decide that today's going to be the day you're trading. So again, your trading plan says, let's go for a 10 pip stop loss. Let's go for a 1 to 3 risk reward ratio. You come into the market, you see a beautiful pin bar, and you see price pushing down from a major level in the market. Not only that, but what's happened is price action has come back to a major resistance level. It's left it, came back to give you a beautiful double top. And because you're feeling good, you see this with so much clarity in what you do. Coming into the market, you increase your stop loss just a tiny bit, just to make sure it's above structure. You go for your risk reward ratio, 1 to 3, and then what happens? Price action pushes down. We have a small exhaustion. We go for a huge impulse. We might go sideways moving market, and then before you know it, boom, you hit your targets. Now, what's changed today? Has the market structure changed? Probably not. Market structure is market structure. You followed your plan. You decided that you're going to put your stop loss above market structure, increase your stop loss a tiny bit, still risking the same amount. But the only difference is today, you see the markets with a bit more clarity. Now, with our previous example, you may have seen the market, or the market may have been exactly the same as this, but because you're feeling down, you may not have seen it the way it was illustrated to you. And if you had just stepped away from the markets previously, instead of having your stop loss here and being stopped out, you could have had it above structure and still won your trade. So the point I'm trying to make here is when you're setting your trading plan, I would not set it in stone that you have a 10 pip stop loss, a 15 pip stop loss, a 20 pip stop loss. Work with structure. If the market is illustrating structural highs, lower highs, or double tops, or whatever it is you're looking for, aim to keep your stop loss above the structural highs or the structural lows. What you have to do in the morning is decide, when you wake up, are you feeling good? Or are you feeling a bit down, under the weather, and you feel like today you may not have as much clarity? Well, if you're this type of person, you can come into the markets, you can be a little bit more aggressive, you can enter the markets and say to yourself, well, look, this is clear, this structure is clear here, this breakout below this neckline is clear here, I can increase my stop loss to make sure that, you know what, I've got the best risk reward ratio and at the same time a very safe trade. Or you can say to yourself, feeling shitty, I've come into the market, let's enter these trades, very bad places because it's pushing down, I've entered the trade late, oh, I've missed that trade, let's enter this one now at this opportunity because I missed this entry here and be stopped out. Well, it's your choice. What I want to say throughout the course of this, or the whole reason I'm doing this, should I say, is if you're this type of person and you want to trade, what I want you to focus on is not the reward, but how you can shield your account from being damaged from how you feel. So what that means, and very simply, is when you come into the market feeling down and shitty, all you simply have to do is increase your shield just a little bit more to give yourself a little bit more protection if the clarity is not there. In terms of your reward, if you're a 1 to 3 risk reward ratio trader, what you can do, chop off 1 R and go for 1 to 2. The sacrifice to have a safer stop loss and a lesser target is much better than going for less clarity with a smaller stop loss and a bigger target. I hope this was useful, pretty simple. Hope it made sense to you guys. We'll be coming with new vids from tomorrow. Again, if you like the content, please drop us a like, subscribe, and turn on notifications. Take care for now.